Euro dollar pushed up into critical resistance and was rejected. Traders currently are split. The question is, are we going to break upward towards 114.35, or is this a complete bull trap set for the pair to travel down to 111 this week? We got you covered in this video. We're going to be talking about U.S. inflation data and Eurozone weakness in play. This could be the turning point for the pair. Welcome back, everyone. This is Tom from Park Avenue Trading, your chief dealer, keeping you sane in insane markets. And here is the weekly update for the euro. It is Sunday, 9:50 in the morning on May 11th, 2025. Let's get into it. Let's do a simple little technique to basically give us an idea if a marketplace is actually going to try to come up to hit the 114.35 critical resistance. We're going to do 3-bar harmony on the dailies. So right now, this week's going to be opening up. So I count back 3 bars. 1, 2, 3. And I find that the resistance that we need to break out this week is 113.80. Now, right behind it is weekly resistance at 114.35 and the ultimate resistance at 115.15. The high bars close right there, which is really, really important. All right, so what does it look like? Well, the euro is basically weak. Now, I have to say, it flirted with the major resistance at like the 115, say 30 level, got rejected pretty quickly from up there. There's no real momentum for the euro dollar. It's really trading on what I would consider a thin wire right now. Marketplace would probably on, weak or actually non-inflationary data coming out this week may push the euro back up towards that 114.35, thinking that there's going to be a Fed rate cut. But I'm going to tell you, I've been really thinking about the Fed, and I'm going to be doing a video on M2. And it's a really, nobody talks about this. Back in when I first started trading back in 1988, between 1988, actually before that, it was like maybe 1985, which I wasn't in the dealing room yet. But from my experience, it was like 1988 to 1995. M2 was traded just as heavily as GDP or GNP at the time. And it stopped. They basically switched away. They just don't pay attention to it anymore. Now, why? Well, because the Fed kind of went from money supply targets that drove in interest rates to just interest rate target. But I am sure that the Fed is still paying attention to M2. And M2 is hugely overflated since COVID. They injected so much cash into this market that they have to be careful with rate cuts. So if I'm right, they're really going to hold rates steady. And it really doesn't matter. I think I said in a previous video, stock market's doing just fine. It's at 41,200. It's better than it was before. Actually, let's see if we could pull up a stock market here. We're not, at Dow Industrials right now, where we recovered from off the lows, off of the tariff shock. Okay, we're not still up through the 42 or hang on, let me get over to the high. I don't really follow it on a daily basis, but we're not up through that 44, 433 yet. Okay. However, we are tracking towards, the high bars close at 42,500. We break that, we're going back up into this area. So stock market's doing fine without the rate cut, and the Fed is aware of that. Not that they really care, but they do care about their buddies that are our hedge fund managers, and they're probably screaming like, cut the freaking rate, man, let's get some fuel. They don't really need it. They really don't need it. But anyway, so I digress. So if we're looking at 3-bar harmony, we need to get through this top at 113.80. However, this week created this low right near a very critical price of 111.80. Now, if I'm going to say, really, I'm a euro bear. But I don't really trade this currency straight up. I trade, euro yen, I trade sterling yen, so I primarily pay more attention to dollar yen. So in my next video I'm going to be putting out today, I'm going to be covering euro yen, but in that video I cover dollar yen, sterling dollar, sterling yen, and euro yen. And if you don't want to watch that video, the simple point of that video is on Friday I went long dollar yen. I went long at 145.16. I got to stop at 144.68. And I'm expecting dollar yen to this week rally up to potentially 147.30-ish. That's just my position, okay? My idea. I got it in play. We'll see what happens. You know, could I be stopped out? Absolutely. Can I make money? Absolutely. So I will pay attention to what the marketplace does tonight when the Asia market comes in, when Tokyo fully comes in. That will be really give me the clue whether or not I got this right or not. So anyway, but as we stand right now, euro dollar flirting with support at 111.84. If that breaks, it's opening up 111 the figure or so. If that level goes this week, we're literally looking at, you know, a potential for this thing to go down to, I would go right here, 109.50. And I would think that the market, you know, it has a potential really to go down to this level right here, 108.5, no problem. So this is the first critical price, 111.80. 111.04 goes, we're probably looking at 109 the figure. All right, so I'll put up a line over there. I'll go to this low bar's close right there, say 109.04. However, if for some wild reason, you know, there is some bullish news coming out of the Eurozone, which I don't see happening, and this is my bias. I'm showing my bias in this video. I'm thinking euro down. It could track a little bit. Yeah, I think that it could track between this 111.80 and the 114.35. I would really think that this area is a good sell area with a stop at around 115, say 50 or so, for a longer term kind of pull downward. If it breaks this 111.80, I would be suspect that the market is actually not really going back up, and it's going to attack the 111 the figure level, which then it could trade in between, like say 109.90 and 111 like say 50 or something. That's what I'm thinking. So that's what I got going on in the euro dollar. I'm bearish. I could be completely wrong. Make sure you do your own research. You know, trade your system. You know, don't. I'm giving you my opinion on the whole situation of the euro. But anyway, if you have an itch that you want to read more about technical analysis, you could go over to Park Avenue Trading and get yourself a free ebook on breakouts. So I think it's a great book because I wrote it. But hey, you get a free ebook, and you join my mailing list. And yes, I will send you emails, and I will send you stories and lots of cool little information in those emails. And I look forward to seeing you on the daily analysis. And don't forget to come on over to that, because I'll give the pinpoint points of the day where I think that if it does this, it will do that. If it does that, it's going to do this. And I'm always usually ahead of the market to give you plenty of time to check the points out. Of course, if you watch my video 5 hours later, they're absolutely no use. But anyway, look forward to seeing you again soon. Cheers.